There we go. There we go. What's going on, guys? Welcome, welcome, welcome to Tuesday session, right? It's usually a trap session, but today we are going to go over the 4XLG in its entirety. I'm going to try and keep this video about an hour. I'm not trying to get off track. I'm going to try and stay really solid. Just give you guys an idea of how, when I'm telling you, you can turn your swings into your scalps into swings. What I mean by that, what's going on, Donnell, and how you can do that, right? By being on one time frame, understanding the movement of that time frame. Let me go ahead and get my screen share. That's cool with you guys. You guys want to go over the XLG? I know a lot of people have been waiting for this one. I guess you can call this part 1/part 2 for some, but this will be part 1 of what the 4XLG is. I kind of went over it a little bit already. You guys have the notes. We do have some more people here though, so I'll go over it a little bit more in detail as well. Let me get cool. So coming to Euro USD, right? It really doesn't matter what time frame you're looking at this pair on. I guess for the sake of the class, we'll look at it on the 1 hour time frame, right? But I'm gonna break down again all of the moving averages, everything that they're used for. Because actually the last time I did this video, I had 2 of them confused, so I'm gonna redo that too. So let me just pull up the settings. Right, so getting started, looking at the settings, right? This is what the settings look like. I'm not changing anything. I do not change anything. What I can tell you, you can make this to 10, you can make this to 20. You guys just learned that today, right? You could do that if you wanted to. It looks exactly the same. Let me see. There we go. Yeah, I'll just turn that off. There we go. Okay, there we go. There we go. Right. Looking at the settings, right, of the 4XLG. You can, it is originally the 7 and what, the 13? We just learned today about the 10 and the 20. You can also change it to the 10 and the 20 if you want to, right? But for this case, we'll leave it at the 7 and the 13. So the settings, right? The 7 is mustard, right? The 7 is mustard. Write this down if you guys are taking notes. I'll write this down for you guys too. All right, 4XLG. Mustard 7 EMA. Right, and then we've got ketchup. Ketchup is the 10 EMA. I'm gonna do it like that. All right, and so ketchup and mustard are used for scalping. Yeah, 7 and 13 gets you in the trade just a tad bit sooner, right? Just a smidget. The numbers aren't too far off, and the 13's actually, yeah, just a smidget. It gets you in the trade a little bit earlier. Yes, it does. Right? These are used for scalping. Oh, let me get this. There we go. My keyboard. Nope, we're good. We're good. We're good. Scary moment. Scary moment. Right? Used for scalping. So typically, when you are looking at ketchup and mustard, you want to be on a lower time frame. You can use them on any time frame, right? But know what they are used for. They are used to get in and out of the market quick. All right. As soon as we see price cross here, all right, we had price cross in this zone right here. You enter for a buy right after this candle closes. So we would enter here right? Technically, I'm not using a stop loss when I'm scalping because I know what's happening in a sense. It's going to happen fast. So I just kind of want to let price move, but that's only with scalping 9 times out of 10. Would I ever only recommend not using a stop loss? Does it matter for us that these are exponential moving averages while the 10 and 20? It doesn't matter. It doesn't matter. The 10 and 20 alone, I use just regular moving average. But if you wanted to change it to the Forex OG, you can use them as the EMAs. Totally fine. Totally fine. It'll work the same. All right. So seeing the cross, we know when mustard crosses up over ketchup, we buy. Right? When mustard crosses up over ketchup, we buy. Right? Simple as that. And just like we learned earlier today, price will come to retest the cross. This is also another entry. All right. We understand how to use the 7 and the 13. Where did I put that note box? Yep, we're good there. All right, cool. Now we've got the 50 exponential moving average, right? But that on here is called water, right? Water is the 50 EMA. We all should be familiar with the 50 EMA. Right? It's used to identify the intraday trend. Did I hear you say wait for a candle closure? No, you do not have to wait for a candle closure. You do not have to wait for a candle closure, right? Even if we see the price crossed here, right, for ketchup and mustard, price crossed for a buy. If you saw this was the candle that forced price to cross, you can enter. If you saw this was the candle afterwards, you can still enter, right? It's still safe to enter. I'll show you on a lower time frame. This is a higher time frame, so it's moving and working a little bit different. But I'll show you on a higher time frame, right? Water is used to identify the intraday time frame, meaning 30-minute to the 1-hour time frame. That's what the trend is going to be showing. So let's say we move this over here so we have it. All right, because I want you guys to truly understand why I'm telling you it does not matter what time frame you are on if you know how to read the moving averages correctly. All right, so if we are in this area and we see mustard and ketchup crossing for the buy, we also see that water is here as well. We are above water. What this is telling us on a 10-minute time frame is that the overall trend for the intraday time frame, we are now above. Right? We are now above the overall trend for that intraday time frame. So as you get ketchup and mustard crossing for the buy, we're above water. It's just another confirmation, right, to enter the trade. So if you had one entry after the cross, your second entry is just like how we teach it when we're using a trap. What do we do when we are above water, right? When we're above the 50, right? When you're above the 50, what do? You buy, right? Or you swim, right? You swim. When you're swimming, you're staying alive in my thinking, right? Swimming, that's how you make the money, is if you can swim. All right. So if you're above water, you buy. That alone, guys, can be used as an entry point. Just the moving average. If we're talking now, just the moving average, that alone you can enter on. Right? But when you start digging deeper, understanding market structure, price action, you see there is a bullish engulfing. I just so happen to have strategies that work together. Not everybody's strategies work together in this way, though. It doesn't always work like that. That's why when you guys are saying, is it that simple? Unfortunately, it is this simple because I was able to work them together like this, right? So not having to leave any time frame, right? Or stay on the one that you're on if you're scalping. You now know that the 1 hour trend, you are above. The 1 hour trend is bullish. And we see this on the 10-minute time frame, right? All using water. Do we understand how to use water? Drop H2O in the chat if we understand water. Drink some water if you had it, right? Drink some water if you can. Right, that's how we're using these moving averages, guys. You don't really need to leave time frames. You don't need to check all of them. I have all of them for different reasons, but using this 4XLG is kind of simplifies having all of these. But you can confirm it, right? So if we're saying the 1 hour trend is bullish, we should be able to go to the 1 hour trend and see that it's bullish. I'm not going to refresh. Oh, I didn't need to now. All right, let me see. 1 hour trend, we see that it's bullish, right? And we found that out from the 10-minute time frame. So going back to where we were, we now know how to use and identify the 50 EMA while using it along the 4XOG. Now, the next moving average, you will have to change your settings. You will have to change your settings. On the 4XOG, they made Mayo black, but just change it to white. Because again, if you're eating black mayo, it's probably not safe. It's probably bad. I don't know anywhere where they make black mayo anyway. So yeah, don't do it. Ketchup is 13. Yeah, ketchup is 13. Ketchup is 13. All right, mustard is 7. Oh, I'm sorry. You're right. Good catch. Good catch. Good catch. Ketchup is the 13 EMA. Good catch, Jessica. Thank you for that. All right. So now we're moving on to mayo. And as you'll see, right, 1, 2. We don't use a third one. So when you're using this, you can uncheck carrot. I've never really used it. It's just an extra. It's the 31. You don't need it. Uncheck carrot, right? So then you'll see water is the next one that we need. Mayo is the 200 moving average, right? 200 exponential moving average. Let me get that added in here. Let's see. There we go, right? Mayo is the 200 EMA, right? Used to identify the 4-hour trend and above. No, so Michelle, the first time I did the video, I had it backwards. That's why I wanted to redo this, because I realized I had ketchup as the 7 last time, but mustard is the 7, ketchup is the 13. Right, mustard is the 7, ketchup is the 13. Right. So mayo, right, is our 200 EMA, and this is telling us the 4-hour trend and above. Right. So when we are on even the 10-minute time frame, and I'm going to show you guys this in real time. Right, I'm going to show you guys this in real time. When we are on the 10-minute time frame, your first entry was here. All right. Stop loss is really always going to be bottom of market structure. If you use one, 9 times out of 10, if price comes that way, then it's just going to completely reverse or break whatever trend you had. Right? So understanding this, and the beautiful thing about using the 4XLG on the lower time frames, guys, is 9 times out of 10, when we see these crosses, we are catching the beginning of the reversal. we're catching the whole move as opposed to waiting for the break and the retest, right? We are literally catching the beginning of the trend without having to wait for the trend to show itself because we know how to read it using these moving averages. That's why I love the Forex OG, right? So we have one entry based on the original cross, right? We now see that price is above the 50 EMA. So what do we do above the 50? All right, we buy. So I'll mark this one as our second entry, right? Now, a lot of you guys have been asking me, I know you guys are using these to scalp and you're saying, well, what am I doing if the moving average, the next one is close, or if there isn't a next one? Hold the trade, right? And I'm going to show you why. In this case, all we are waiting for, we know on the 10-minute time frame, our short-term time frame, we're bullish. We know on the 1 hour time frame, intraday time frames, we are bullish, right? Once we get above our 200 EMA, that is confirming to us on the 4 hour time frame, price is going bullish as well, right? So let's see here. Once this candle closes above mayonnaise, you can then enter the trade again, right? Knowing what the 4 hour trend is though, this is going to be your first swing entry, right? I'm gonna add that to the notes. Right? It is your first, oh wait, no, that is not where I wanted it to go. There we go. All right. That is going to be used as your first swing trade entry. Right. So if you wanted, as your scalper, if you're itching to close a trade and profit as an intraday trader, if you're itching to just get out of the market, then you can close one of these positions. But that's why I'm trying to turn you guys on to swing trading, because why, if you're already winning and you know the trade is going to keep going in your direction for, I don't know, some hours, days, maybe even weeks to months, why would you get out of that trade? Right? Why would you get out of that trade? That's why I love the Forex LG, is just confirming, hey, you can turn this scalp into an intraday trade. Hey, you can now turn this intraday trade into a swing trade, right? So once we see this candle close, right, if that's where we saw it, you can enter as soon as the next candle. You don't need to wait for the pullback. Not when we're using this, you don't necessarily need to wait for the pullbacks all the time, especially knowing this is your third entry. By that time, you're already in profit for your first two. Right, by the time we get here, right, you're 17 pips in profit. And so we're just layering in our scalps, right? This is also how you can layer into your trades. This is the safest way to layer into your trade. Yes, that's correct, Stephanie. You only are worried about price. The next moving averages do not necessarily have to cross. That is turning into just something else. But you don't need them to cross above it. You just need price to be above that moving average. You're welcome. Yes, the first candle close after price closes above Mayo, enter the market. If you want to wait for the retest, you could, but it really just depends on how the market is moving. 9 times out of 10, if we see this trend pumping like this, it may not give you that retest. A lot of times when the market's hit its low and it's time to hit that reversal point, it just kind of just goes. So you can wait for the retest. I typically like to just enter when I see that candle close. All right. So this would be our entry here. All right. So we already now have 3 entries from one time frame, but we know what's happening on 2 different time frames, right? Are we understanding that? Drop a 3 if you understand it. If you are super confused, drop a 2. All right, cool. See a lot of threes, a lot of threes, a lot of threes. Cool, cool, cool. Good, good. Right? It really is this simple, guys. It just takes repetition to understand it to where it'll be clear. That's why I wanted to redo this video and make it clear. So that way you guys will feel more comfortable taking scalps on your own if for some reason, you know what I'm saying, you're not able to make the session or anything like that. All right. Do we understand how to use Mayo? Do we understand how to use Mayo? Okay, perfect. Perfect. Now we've got, I'm only confused because I just hopped in. So buy when above the 50 and buy when above Mayo. Yes, that is correct. If you see that, right, on that time frame, that trend is bullish. Yes, buy above the 50, buy above Mayo. Right, and so now we've got Blueberry. All right, and Blueberry is the, oh, why is it? There we go. Blueberry is the 800 exponential moving average. Whoops. I'm about to get in a whole new setup, man. Right? It is used to identify the 8-hour trend and above. Right? And I want you to understand and realize we are able to see this all from one single time frame. Right? All from one time frame. Do we know what is going on across multiple? Right? So let's check. All right, let's see what's going to be happening here. Whoops, what did I do? There we go. All right. So now we're above Mayo. What you guys can do is you can use Blueberry. Yeah, you can, Tanya. You can use Blueberry as your take profits, right, for your trades. You can use Blueberry as a TP for your trades, right? But you can also use Blueberry as another swing entry as well. All right, so I'll get that put in here. All right. And then second swing entry. Now, when I say this is the second swing entry, technically, this 800 EMA entry is a position trade. When you're thinking about holding something like 8 hours, that's one candlestick taking 8 hours. That's more so a move you're going to be waiting for a couple weeks, possibly. From what I've seen, if something's bouncing off of Blueberry and it's crossing over Blueberry, you're going to be waiting for a while. Yeah, for those who, you know what I'm saying, don't have that patience. But that's why you have all of these other moving averages even within there. For those who are trying to be a little bit more patient and want the big bag and don't mind waiting for it, then taking trades off of Blueberry and Mayo is probably what you're going to want to do. Because there's another aspect to this, right? Because once we get above them, so like now on G Blueberry support, so you can hold for a buy. I'm gonna focus on what we have now. That I'll talk about later. But for those who are watching the recording, I just want to keep the questions from on the chart. And this is me in the past. I've also rewound it. So this is me. We're back testing right now. Right. So yes, once you get to Blueberry, right, you can close the original trades that you had as far as your scalps go, if you wanted to. I'm gonna show you guys something else though. All right, let's get there. Okay. All right, so now we are at our 8-hour trend. And so when you start seeing, right, the 1-hour trends pushing up, we now see the 4-hour trend start to change itself as well, right? You see how the moving average starts to bend up, right? Now we are above Blueberry, right? That is your second swing entry. Now, what you can do is, because we know what Blueberry, what the time frame is, go to the 8-hour time frame and ask yourself, where is Blueberry on the 8-hour time frame? All right, let me see. And I mean this, guys. This is when I'm telling you there's trades. We got 1 to 30 risk reward, guys. This is how I'm getting those, like 1 to 20s. This is how we're doing it, right? So going back to the 10-minute time frame, this has now, where's my box? Our notes. Because I want you guys to still see this. All right, I want you guys to still see it. They don't want to be great. They don't want me to be great. Oh, good. We'll see what price does though, so that way we can get an understanding of how they work, right? So now we are at our 8-hour support, right, for our trade on the same time frame, and I leave it on the 10-minute time frame, and I'm trying to keep it zoomed out like this, guys, because I need you to not worry about all the wicks, right? When you look at it this way and you're not worried about these pullbacks because you know the overall picture, when people are zoomed in, right? Let me get this locked. You're watching every single thing happen. Oh, the wick is, oh, it's about to drop. Oh, it's about to break this fit. Oh, it's gonna, just zoom out, especially when you have entries like this. Just zoom out. Don't worry about it. You really do not have to worry about it. How much money would you need to trade Blueberry? Okay, so using it this way, when you're able to scalp this entry, it does not matter. Keep this, obviously you want to keep this a risk management entry, but by the time you get there, you've got 1, 2, 3 entries, right? And you're at 45 pips. This one's 20. So by the time, right? So now you have floating equity of an extra 45 pips. You are not risking your actual equity, but you're risking the profit, right? So when you open a new position and this new position goes negative, it's not taking your initial investment. It's only taking the profit out of what you were making from here. That is why I'm trying to tell you guys to hold your trades, because it's saving you money. Every time you open and close a trade, you get charged. Especially when you close losing trades, you're losing money at the same time. Right? It's kind of like, think of it as like a hedge against yourself in a way. You're not actually hedging, but when you can layer in and get these multiple entries, it gives you more room to play with. You're playing with free money at this point. Right? Now, again, we have this entry from a 10-minute time frame. I gave you guys where the 8-hour trend was. You just wait. You hold the trade. You hold the trade, right? Every time, personally, every time price pulls back to Blueberry, you could get back in. We're not gonna count this as an entry, but you can. We're above support. So what does it turn into? Once we break support, what do we do? Right? What happens after price breaks support? It does what? Before it buys, what happens? It breaks and what? Break and what? There we go. There we go. Break and retest. This is the break. This is the retest. All right, another break, another retest. And I want it to be zoomed out because I need you guys to understand when you're zoomed in like this, you'll be way more focused on this pullback. But when you look at it like this, doesn't it take away a little bit of the noise and it helps you realize, okay, price is actually above this zone, right? When people are saying, oh, I can't see your candlesticks. So what? You don't need to. People trade like this on the line chart. You don't need necessarily the candlestick to trade, right? You don't need the candlestick to trade. Again, we're still holding this trade. We're still holding this trade, however long it takes. I don't care. Right now, from the time we got in the trade, it has been, right, 3 days. It's only been 3 days, right? And we're at 67 pips. This is how you make your money work for you. You do not need to wake up every day and get on the chart. You do not need to trade every session. You just need to find a fire entry and let your money work. Stop overworking for your money. Let your money work for you. This is how you do it. We are still holding the trade though. There's no reason to close this trade whatsoever. No reason to close this trade whatsoever. I don't care how long. You see price pull back, you enter again, because now look, this is our 4-hour trend line. This is our 4-hour trend, right? We are just pulling back to retest the trend every time. Right? It's just pulling back to retest every time. Look at that. Right? Even when it came here, all it did was what? Retest the 8-hour trend. So this was another entry and confirmation that you are in the right direction. I am still holding this trade. This happening does not matter. It doesn't matter because, right? At this point, it's only been a week. Welcome to swing trading, right? Welcome to swing trading. Look at how price respects levels though. Every time. It is just pulling back to touch structure. Every time. Every time. Pulled back to retest our trend. Worst case scenario, this is where EU is right now. Price pulls back here and shoots off again just like it did here. All of these entries, and this was based on the initial cross. So yes, your scalp trades will automatically turn into a swing trade when you know what you're doing. We have not left the 10-minute time frame. I haven't gone anywhere. I have been on this time frame the whole time. From initial entry, it has been 11 days, 7 hours, and 50 minutes. You were floating 138 pips, and you've got 1, 2, 3, 4, 5, 6, 7, almost 8 entries. Yeah, Jenna, you will have some time for this. Exactly. Because even if you want to scalp, you can come back on these days, right? In these sessions, right? There's movements. There's movement within here. You can, of course, trade this. You can trade this. Even if you just have this same entry. You want to scalp this? Know that you're waiting for the buys. Wait for price to pull back to your moving average and buy. Wait for price to pull back to your moving averages and buy. That's it, guys. No more overcomplicating stuff. No more, oh, I gotta wait for, no. I need you guys to really start practicing this, right? And trust your analysis. All of this happening is a pullback. This has to happen. It has to happen, guys. Pullbacks are healthy in the market. They are absolutely healthy in the market. Are there any questions? Are there any questions? All right, this is happening on EU. It's probably happening on GU. Definitely happening on NU, right? So just understanding what's happening. Look, zooming out, we are now where? At our 8-hour support, and we are above it. We are above it. All right. I'm not worried about all the noise. I want to know overall, what am I looking to do? And I'm looking to buy. Yeah, the settings for the, what part of the settings did you want to see? You literally, all you have to do is go to for indicators, type in 4XLG EMA setup, put it on your chart, go to settings, uncheck carrot, and change the blueberry, no, change mayo to white instead of black. That's it. The inputs, I would have you look at it on, I would have you look at it on your chart, because again, this one, number 3, we don't use, and the SMAs we don't use. I unchecked these two because we already have them on our chart. Right, so it's not the blueberry cross that locks the high and the low, it's the golden cross, right? So I know a lot of you guys have been seeing golden cross and death cross a lot lately. What that is, all right, is when water crosses mayo, right? When the 50 crosses the 200, that is a golden cross. Right? When the 50 crosses up over the 200, that is a golden cross. What this also confirms for me is that the low has been locked, meaning the low of price, the market will not go any lower than this zone. Any retest, anything pulling down here is a retest. It is a retest. Right? We also confirm we are above our 8-hour trend, right? So that's also confirmation we are still bullish. We're still bullish. Now when you have, let's see, this is a good example. Right? When you get water, right? The 50 crossing mayo, the 200 to the downside, right? That is a death cross. So let me put this here. All right, when the 50 EMA crosses down under the 200 EMA, that is a death cross, and we are selling, right? This also means that the high has been locked. In this time of the market, price will not go any higher than this zone. All right, so when I'm looking at what the bullish move is showing me, I know that one of the first levels we're going to come to is where price originally crossed. Right? So if you were to have caught this move, you could take it from cross to cross, right? Literally from cross to cross. That would have been the entry. This would be your take profit. Stop loss, bottom of market structure. Right? That's what it would look like. Just on the crosses, right? Just using the crosses. I'm not really too super focused on price or anything like that. Just really just looking at where the moving averages are itself. Where is price in relation to those moving averages? Is it time to execute? Yes or no? It's really that simple, guys. But I want to say that really is it for the moving averages. Like that's really all it is, guys. The 4XLG, the 10-20 cross, all of my strategies that I use aren't really complicated at all. They're all fairly simple. It's just a few concepts that you have to get down so that way you can utilize them properly. Are there any other questions at all though? Any questions? I'm gonna keep this one nice and short for those who are watching. They're funny. They said who's snoring. It's been a long day. We've been working on a lot of stuff for you guys. I actually have, both my cameramen here. We've been shooting a lot of content, getting stuff ready for you guys. We've been up working since about 10 o'clock this morning. So yeah, we've been working, guys. It's been a long day. But yeah, are there any questions? Let me see, what's this? Okay. No questions? No. Okay, yeah, the 10 and 20 is that video. I did drop that video earlier. So it is in the announcements. This one I'll get dropped as well. And that's why, like Michael was saying earlier, it's definitely the same concepts. Just a couple things are different. Right? Just a couple of things are different. No, Lucy, don't think too much into it. Don't think too much into it. Don't think too much into it. Cool, cool. Well, I'm gonna go ahead and end that one right here just because I want to keep this video nice and short. I want people to have an understanding of what we're doing, how the 4XLG works in its entirety. I'm gonna leave these notes right here for the last few seconds of the video for those who want to grab it. All right, but yeah, guys, that is really all we are going to be doing today. Quick, precise, to the point. It's really not that hard. If I went any deeper, I'd be over explaining it. And if actually you look at it, you can see the tubes, right? You can see the tubes. So a lot of what we're doing is just catching those moves before it happens. The 4XLG helps us identify it. It just helps us identify that. But yeah, guys, that is my time. I appreciate you guys for hopping on. As soon as this recording is done, I'll get it dropped in the chat and I'll holler at you guys later. I'll see you tomorrow morning. Peace. Yeah, you guys are welcome. You guys are welcome. Later, guys.